What's up? Happy Pharaoh Friday, guys. We are locked and loaded, ready to go. Just got the close of bar 7 last week for like 3 days straight. Bar 7 was the golden boy, and we just got a big old fat inside close. So nothing there on 7, that's okay. We might get something on 8, though we do need to be aware of a potential trading range / soft bull channel. I am willing to take continuation in soft bull channels if they look like they're getting a little bit more aggressive to the side that I'm trading. So well within context here. Let's get to work. 4 minutes, 11 seconds out, man. Good morning, guys. How we doing? Giovanni Joe, Lurt, good morning. What's up, Outlaw? Good morning. Derek, how we doing? All right, 8. All right, 8. Let's see. There we go. That's what we wanted. Now we just got to get a nice, clean close. So, if any of you guys are newer here, which we always have new people rolling in, you are looking at a 5-minute chart on Nasdaq futures. This is NQ. Of course, this is the December contract. And we're trading RAM, also known as the wrench action method. If we get a nice clean close here to the bull side out of these bulls, here on bar 8 in the next 3 minutes, then I have a big old gift for the bulls in the form of a stop limit buy order. Don't let us down, bulls. Give us a nice clean push. Let's do it to them here to kick off a Friday. All right, minute 38. Come on, bulls. Give us a good close. Now, of course, if we do get that good close, there's always a counter argument. Newer traders are always a little too cocky and not confident enough. They're a little too insecure, so they cover it up with cockiness. And that's not good. You got to be confident that your strategy is going to work, but understand that you live in a fog on every trade. So is it going to work in the mid to long term is the question. Once the sample size gets a little bit bigger, you know, the week, the month, especially the year. But on any given trade, you take good trades, put it on, accept the outcome, move on. All right, 48 seconds. Come on, bulls, pop this thing. Better seeing a trading range. Well, all right, we're 8 seconds out. I'm going to get the copy trader ready just in case we get a last second pop. I don't want to miss anything. All right, bar 8, inside bar. Let's go bar 9 here and see what we get. 340. Come on, bulls. So obviously, you know, I mean, we might end up drawing it like this if the bulls can't get anything definitive going here, which would get rid of this. Now, let's hope that doesn't end up being the case. But, you know, who really cares? We'll take the market as it comes, put on any setup that presents itself. Come on, 9, give us a decent close. That right there, 9 closing above, clean and above the wick high of 8 is our quickest path to a setup here. All right, halfway through here, 223 out. Come on, you little bulls. Let's get it done. "60 seconds? What you got for us, bulls? Come on now. Well, we better get ready, huh? Just in case. All right, we're 18 seconds out. I'm gonna get the copy trader ready to go. We really gotta see a bull pop. I need to see it close above the wick high of 8. Insecure bulls, on to bar 10. Javaz, size down into the finish line. You've already invested enough time into that thing. Just size down into the finish line, scalp your way there. At least that's what I do. All right, 318 out here on bar 10. All right, 2 minutes out here. I think the bears are looking at this as probably just trying to turn it into a trading range. You have 8 attempting to grow and failing. Same with 7. 9 staying small. 10 attempting to reverse back into a newish range. So, I mean, I guess let's see if the bears can get that done, make that happen. First payout in the bank. Very good work. You know, we've talked about this before. I know a lot of you guys just, you know, because you're early or you're just not quite turning the corner yet, or you haven't done so yet, but you might be close. That feeling when you first have money hitting your bank from actual trading is different. It changes things. Because before you have that, this kind of just feels fake. Pretend, hand wavy. You probably think of it more like a game than anything, unfortunately. You shouldn't, but you probably do. And then once you actually go and pay a light bill with trading income, or you go buy some nice groceries, and you know that, you know, you printed the money out of the market through discipline, patience, and skill. It changes your perspective when you sit down to work each day. And it's a really good feeling. And I hope you all feel that very soon if you have not yet. Is there any extra precaution that you take during trading days like these when there is a huge gap up and might reverse any moment? No, not really. I trade the price action. I don't care if there's a huge gap up. The price is what it is, right? The price action is the relationship between bulls and bears. People like to get, now this question aside, people like to get really like, when this happens pre-market, then this has to happen during the day. People like to look for those patterns because they don't have an edge, so they're like grasping at straws. Oh, CPI hit this morning. Those numbers were fake. I'm shorting this thing. There's no edge in that. The fuck are you doing? The price is what it is. Now, it might reverse, and I'll short it on the way down if it does. But this thing could also just bull trend all day. Right now, it's a soft bull channel. We haven't had any setup so far. We're going to get one here soon, though. But no, it is what it is. I trade the price action. I have one indicator on my chart. It's a 20 EMA, and honestly, it's only there for context. I could just as easily get rid of it, and my performance would not decrease. You know, interestingly, I think a lot of you guys are overcomplicating this. You know how, like, in the fitness industry, like 15 years ago, 10 years ago, everyone wanted, like, what's the secret sauce? Like, what's the supplement? What's the thing that I buy to get started? And it's like, there's nothing. There's nothing. You fucking make a list of 10 foods, you eat a measured quantity, and you don't train like a pussy. That's how you do it. And everyone's like, yeah, but like, what's the thing that I buy? There's a handful of things that work. That's it. There's no secret. Now the fitness industry has kind of moved on from that. Everyone knows. And people are like, okay, so I just do the stuff. In here, it's still in that weird place, and please move on from that. It's not real. You're covering your lack of patience and discipline with, I don't know the secret yet. Dog, there's no secret. Trade a methodology that works, have patience, and be disciplined. That's it. There is no luck involved. As much as you'd like to believe there is, that's why you're losing, because, oh, I didn't get lucky. No, you suck is why you're not winning right now. Because you can't sit here and stare at a chart for 3 hours and not take a trade if you need to. And then when you do get 4 trades in 45 minutes, you don't put them on because you're scared. That's your problem. It's not, oh, I haven't found, oh, gap fills. It has to fill the gap. That's why I'm losing. Come on, dude. You really think that's it? I don't care if you don't win. If you're gonna just reject everything that I say or everything that anyone who's gone before you says worked for them, why would we care if you reject it? But I want you to win, big dog. It's simpler than you're making it. It's just harder than you think it is. All right, close of 11. Let's see what 12 brings, man. We're clearly in a soft bull channel. So I would probably need 12 and 13 to convince myself to get short. So let's see what those bring. Good morning. Good to see you. All right, 12. We're 3 minutes, 10 seconds out. Let's see what 12 brings. Hey, Nico. The RAM approach would work well on GC2? Is it a question or a statement? Either way, yes. Listen, guys, as long as the market is liquid enough, you don't have to ask that question. If there's volume, and I'm not saying it's a question, but if you do have a question, if there's volume, the price action, it doesn't matter what you're trading. The price action is extraordinarily similar on everything, unless the exceptions are not even really an exception. It changes a tiny, tiny bit. You watch more level 2, blah, blah, blah. If you're trading like small cap momentum, if you're trading like crypto, you want to watch volume. But let's say futures in liquid markets. It's all the same. Pick one that you like, that you can scale, that you can trade forever, or pick 2 or 3 if you really want to, trade 8 hours a day, 10 hours a day, fine. And you can trade the same way on all of them. And you can trade the same way on all time frames. You can trade the same way on a daily that you trade on a 1-minute chart if you want. As long as there's enough volume to fill the candles, you're good. Now, the quantity of setups and the quality of setups shifts. The higher time frame you go, the lower the quantity gets, the higher the quality on average gets per setup. Lower time frame you go, the higher the quantity, the lower the quality on average. Okay, so you can get a little bit less edge, but a bigger sample size. Same amount, if not more money, if you can maintain quality trading at a fast time frame. Okay, so we're 18 seconds out. This is bar 12. For me to get short, I would absolutely need 13, because this is coming not only right into the 20 EMA, right into a very obvious low of a soft bull channel. And I would absolutely need 13 to take that thing out and close like down here. And all of a sudden I'm getting short. All right, Bears. I like that so far. Let's keep that moving. All right, 328 out here till the close of bar 13. Now, for me to present the Bears with a nice little present called a stop limit sell, I need the bears to get confident enough to close this nice and clean at or close to the wick low of itself. I am okay if it doesn't close beneath the wick low of 5, though I would prefer it to. But I don't mind if it doesn't. ATR 29. There you go, bears. 220 out. Now, depending on how low this closes, if it closes low at all, I mean, it might be a stop hunt, it might not. It depends how low we close. The lower we close, the more likely I am to stop hunt the low of 1, which I would love to do. 2 minutes! Come on, bears, don't let us down. Take this baby low. Close it up. Derek, could shift from a channel to a sideways though too. Yep, it could. Yep, there's always another look. Bull's trying to pop this baby back into the range. Let's see if the bears can take control again here in the next 70 seconds. Okay, interesting. All right, 20 seconds out. Let's see how this closes up. If this does close up as a small little bull body, all of a sudden 14... moderate bull bar on 14 becomes a look for me if this closes up, you know, pretty much as it is. All right. All right, let's see if 14 gives out or 14 actually closes above the wick high of 12. If it does, I can make sense of that. All right, bears, let's see what you got. 3.5 minutes out. Yeah, we have so many options depending on how this bar goes here. We really are only... I mean, we're closer right now to a bear setup But we're not far off a bull setup either. It just depends on this bar decides to work. Jim, there are actually 3 options. There's buy, sell, and do nothing. That third option, everyone seems to forget about, which is why they're losing. What's up, Corey? Good to see you, big dog. Appreciate it. All right, minute 55. Do these bulls have something for us? Okay, now after all that development, I don't necessarily need it to close above 12, but I would, I'd really like it to. Yeah, definitely not like that, man. 65 seconds. Come on, bulls. Well, let's get ready here. All right, we're 20 seconds out. Gonna go ahead and get the copy trader engaged. And here we have a reasonable setup here. If the bulls can close this nice and reasonably close without too much wick, those bulls get a stop limit buy because we are in a soft bull channel. That is ugly as all hell. I can't take that. Look at that close. Oh, you bulls, you're killing us with your insecurity today. All right. All right, 15. Save us here. You see that? Bulls take it higher and then wick back. Last second. Do you have a set time limit for yourself on how long you'll stare at charts, or do you just go by how you feel? Not really, not anymore. At a certain point, you can kind of just do whatever you want. So, if the market sucks, and I'm not, you guys know, if you hang out for any amount of time, like I'm not the guy who every day is going to say this market sucks just because you're fucking losing. No, sometimes the market's really good. You just happen to lose a few trades in a row. And then you have a decision to make. Sometimes the market's, not so great, and you're actually trading relatively well because you just have a feel for it for whatever reason. Some days, Man, some days, honestly, I'll trade for 6 hours. Futures for 6 hours. Other days, you know, I'll get off stream and I'll never come back. Just kind of, I don't know. Depends how the market is. If the market's trending hard, I usually try to sit through the afternoon. Because the ROI is just, is too good. But, I mean, you know, when the price action is really slow, especially when ATR is really, really low, it's like, yeah, there's better things to be doing. But, you know, if you have positive expected value and you really want to grind hard, you should sit through that. It's just long term, you know, you're not going to want to do that every day. I do think you should trade every day. I know a lot of people are like, it's always crazy to me when I hear traders say, yeah, you know, I don't know if I'm going to trade today. And they end up trading like 1 day a week. It's like, okay, this is a hobby. I just don't think you like doing this very much. I think you should sit down for at least a couple hours every day. At least an hour, man. Every day. Like, minimum. Ideally, like 2 minimum every day. And then if the market's trending hard or something and you think you're positive, you think your expected value is better than average that day, I think you should sit until that's really no longer the case. Or until the market closes. Other days, and it also depends where you're at in your life. You know, other days, if the market's ranging hard and it's a tight range and ATR is 8, you know, you're going to get a better ROI going and doing something else, whether that's a money ROI or a mental health ROI, whatever it is. All right, we're minute 15 out here now. You could draw this like this. You meaning, you know, algorithms and everybody else like this, or you could draw it like this. Probably I'd split the difference. If we get rid of this, this becomes easier to see. So there's options here. If 15 were to close right now and you took it, it would be early, right? Earlier than like average. Lower probability, higher reward to risk. Or if it closed like right up here, right now, you could wait for 16, see if 16 punches through, and that would be my preferred bar for me. But you should understand, within the RAM framework, guys, as long as you're doing things that are reasonable, you cannot be too hard on yourself because you can always make sense in the math somehow if you're doing something logical and something reasonable inside of RAM. Okay, that would be reasonable. You would just have to go for, you know, understand, okay, the probability here is not what it would be on bar 16 if we got another bull body. So what do I need here? Well, I need a better reward to risk. And we know that, you know, probably more often than not, this is going to turn right back into a trading range, and I'm not going to get that far in the money. So if I do get far in the money, I better get a good reward to risk to make up for that lower probability. So let's wait for 16 here, see if 16 can pop, give us a nice close above the wick high of 8. If it does, I got to stop limit buy for the bulls. Are you guys catching on to what I mean when I say that this is an incredibly low stress? That's very important. The decision making is very easy. Like, once you, and I think people could vouch for this, once you have been trading RAM for even just a few weeks, and you've asked some questions, and you're like, okay, that makes sense, that makes sense, that makes sense. You start to just kind of see everything all the time and know what you should or should not be doing. Now, the hard part that people struggle with is just not doing anything when they shouldn't be doing anything. That's the hard part. But at least now you know, right? Whereas most people genuinely have no idea what they should be doing at any time, and then they kind of just flip a coin in their brain. They're like, I think I see this. Guys, there's not a single consistent, even midterm or long-term successful trader on the planet whose strategy is, I think I see that, let's do this. Every discretionary trader, which I would say that I am in part definitely a discretionary guy, but there's a framework involved. It's not just 100% discretionary, literally like I look at the chart and I say, without any kind of thought process as far as price action or anything, I just look at it and I go, this feels heavy, let's get short. Come on, dude, really? That's what you guys are doing. So many of you. You're like, well, I'm not really doing that. Yeah, you are. You are, because you're bored. You're bored and you're like, I need money now. I want action. Okay, go to the tables then. Come on, dude. This is a profession. This is not to entertain you. And let me just say, man, that's disrespectful as all hell. If you're sitting here trying to do better for your family and they're like really believing in you and they have all their faith on you and you're carrying them on your fucking back and you come in here and you're like, ooh, I'm gonna have a lot of fun buying and selling today. Fuck you, homeboy. What are you doing? That's not a good look, dude. Have some more respect for yourself, dude. You can do this. Don't shoot yourself in the foot just to prove yourself right that trading is hard. Trading is hard, but you can do this. Get it done. You study any kind of methodology for a week and a half and you know what you should or should not be doing. And now just do that. Do that for 2 weeks. It's okay. Have a healthy distraction. Market's not doing much? All right. You like music? Put on some music. You like a podcast about something kind of boring but interesting? Throw it on. As long as it doesn't distract you from the good trade of the day, totally fine. What you shouldn't do is sit in a quiet room, door shut, with nothing. And you sit here and you stare at the candle going up and down for 4 hours. You're gonna put something on that you shouldn't. You're human. And this should be enjoyable, by the way. Like, that is a miserable existence, no matter how much money you're making. So enjoy this, but don't miss anything. All right, 16, what do we got? This is a trading range at this point. So we need some to break, baby. That's right, Bucket. That's right. Everything else in life, no movement equals no progress. Well, guess what? In trading, you have to stop moving for a little bit so that you can move forward. And what does not moving look like? It doesn't. I get it. Like, you're like, well, what am I doing if I'm sitting here not doing anything? You're reading price action. I've watched a disgusting amount of charts in my life. A disgusting amount. And it's only going to get exponentially more. And I loved every second of it. But it was a lot of sitting here just doing this. Oh, it's interesting. Look at that. What's the context here? Oh, I was wrong. Here it is. And you just get better every day. Throw in a methodology on how to execute, and you're probably going to do pretty damn well. And then it's just a matter of how much can you scale it. And let me tell you something. The futures market is really, really, really deep. So if you're getting started and you're like, I think, our future's right, let me assure you that for the vast majority of you, this is where you want to be if you plan to trade for the next 20, 40, 60, 80 years. You're probably going to live longer than you think the way that everything's going. So you want to have room to grow. You'd rather have it and not need it than need it and not have it, right? And the futures market is really, 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 really deep. There's a lot of money here, okay? And it's a beautifully designed trading product. It was designed for active trading and hedging. And man, did they do a good job. It's very well designed. This is the spot to be if you're here like, okay, I want to trade, you know, one product or two products or three products as a core foundation for revenue generation, basically for the rest of my life. This is it, big dog. Here you are. Great start. I'll get to work. All right, 17, 250 out. All right, Bears. Take that baby toward the low of the range. Punch it through and keep it going. I want to stop hunt that low of 1. I'm straight, Doug. Yeah, alert. Listen, I don't know what the numbers are, but exactly at least, but I will tell you the amount of notional turnover, dollars exchanging hands in the futures market every day, even just on NQ. It is disgusting. It's ridiculous. It is so much bigger than you think. And it is so much bigger than these other industries like sports betting. Dude, sports betting is our child. It's our little infant compared to NQ. The entire industry. It's all here. Go get your piece. Be patient. Be disciplined. This thing is brutal. It doesn't care if it takes your last dollar that you needed today to eat. It doesn't give a shit. It's not human. Right? Now you're like, oh fuck. Now let me put you back together and give you a kiss. The fact that it does not care that much means it also doesn't care if you come in a single day, 25 years from now, and it trends, and you're like, let's go. And you sit there and trade for 6 hours, and you end the day and you look up, and your P&L says $4.5 million fucking dollars in one day. It doesn't care. It doesn't even know you were there. Do you understand yet? Okay, here we go. All right, that right there is the low of the range. Let's see 18. Come on, 18, give it to us. I don't need it growing compared to 17. 17 was a sizable body. Okay, so let's see 18, moderate bear body. Boom, put it on, let's take out the wick low of 1. Stop hunt that baby. 5 minutes out. Well, 440 out at this point. Yeah, pursuit. That could not be more true. All right, 18, 320 out. Give it to us. Come on now. This market's been very light on definitive setups here the last couple of days, but this right here is just about one of the best looks we've had in the last 2 days. Okay, hold that, hold that, hold that, hold that, hold that. Don't take out those lows yet. That's getting kind of close. Yeah, I'm not really a big fan of that, but I still wouldn't be, you know, I'd be willing to put it on, but less of a swing mentality, more of a scalp mentality is this. If that whole day is a range, a lot of times what you get is you get a punch through, take out the stops, boom, big reversal right back into the range. Happens all the time. But this is a nice bear push. All right, there's the close of 18. You see how insecure those bears are? That tells me that I think the bulls are trying to make this a little trading range the whole day. Not little, but, you know, I don't know, what, 120 points? This whole thing, you got to think about that. All right, guys, real quick break. I'll be back in a couple of minutes. Don't go anywhere. right, welcome back. 220 out. Here on bar 20. You know, guys, there's a few really good examples today of why context is so important. Like, I think the biggest problem people have when they first start trading RAM is, one, their setup quality is not the best because they skip context. I don't know how else to say it. Context comes first always. Always, 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 always. Always. Range, trend, soft channel, what is it? Okay, then you apply the setup logic. If you didn't apply the setup logic, which is why, and I know some of you listening here are wondering this right now, you're like, dude, just explain in one sentence. It's like, okay, why? So I can lead you to slaughter? No, I'm not going to do that. It doesn't work that way. Because if I said, just look for 3 consecutive bear bodies and then sell. Okay, well, depending how you manage 12, you would have either gotten, I don't know, some kind of small winner or gotten blown out. If you bought the high close of 15, you would have gotten blown out instantly. You cannot ignore context, which is why you guys, I'm always saying, well, this is a range, so I'm going to wait for 16. That right there is why I waited for 16. Do not ignore context. 90% of you are going to go on to continually ignore context. I hope you're the 10%. And I think if you treat that as step 1, and then you look at the setup, and if both check out, then you put it on, I think you're going to do extraordinarily well in this industry. But right now, we're on a big full day's range, trading range. So if bar 20 here can close, you know, nice and strong, ideally, I care less about the 20 EMA at this point, but ideally still above the 20. Yeah, okay, let's watch 21. Yeah, those of you guys asking about a bunch of different props or talking about different props, man, just trade whatever one you want. Trade whatever you want, but I will heavily vouch at this moment in time for Take Profit Trader and Apex, and I have no reason to believe that that will change in the future. Of course, anything can happen, but I love those two companies, man. They pay. I've never had issues. In all my time with Apex, you know, which has not been forever, but in all my time, I've only ever gotten denied one payout, and it was my fault. It was my fault because I had a weird, like flipping, like there was a split second where I had one account long, one account short. I fucked it up. It was my problem. I knew it immediately. So I had to get that one out of the way. I was like, okay, got denied, on to the next, and then it, you know, we were fine. Never had an issue. That was like their problem. But there's a lot of good props out there, man. Yeah, TFD. I like TFD. The issue that I had with TFD had nothing to do with the guys at TFD. What it had to do with was that the way that they have structured everything, I love the affordable indicators copy trader so much. I'm such a big fan, and I cannot plug TFD accounts into the affordable indicators copy trader. And I'm not going to run 2 copy traders. I'm not going to do it. So, you know, whatever's best for them, obviously. But if they hit me up and they're like, hey, Nico, we can plug into affordable indicators on NinjaTrader now. Boom. Instantly back. But currently with my setup, man, Take Profit Trader and Apex are the winners. Okay, yeah, so we got a little something setting up here. If we can get a nice clean bull push here out of bar 21 and a nice clean close, I got to stop limit buy for the bulls. Same copier for Take Profit and Apex. All right, ready? All right. 20 seconds out here. Copy trader engaged. 19, 20, 21. We're in the middle of a big full day's range trading range. And we've got room. So signal bar is good. Boom, place that guy there on the rollover. Give that about, 25, 30 seconds. See if we get a fill. Suck that down. I don't know what just happened with the copier, but we're good now. All right. ATR 29.5. I don't know what just happened. See if these bulls can give us a nice push. All right, bulls, there we go. Keep that moving, bulls. All right, now as we come into the higher third, top third of the trading range, a full ATR is pushing it a little bit, but that would be great. But half an ATR, the math on that is not quite as good. Ideally, I'd like to get at least 2/3 of an ATR. I think that's kind of the sweet spot here on this trade for me. Little continuation inside of the range. Can't get greedy though as far as the top end. So 2/3 of an ATR. I'm cool with that. See if the bulls. We've gotten damn close. All right, bulls, take that through. ATR is 30. $60 seconds left here on this 5-minute bar. Of course, the counter look here is Bear's probably trying to make that a thing. It's fine. There's always another side to the trade. As long as you're aware of it. All right, you know, half decent little close out of the bulls. Not the greatest close we could have asked for, but just fine. But that is not a decision bar, so I don't need to do any adjusting here. At least not yet. All right, 23. Take us home. Boom! 2/3 of an ATR. And right coming into the, well, now into the top third of the trading range. So small scalp, 1,900 bucks. You know, good scalp. I'm not going to necessarily say that that's small. That's bullshit. But all right, let's move on. ATR down to in the 28s now, below 30. I like that ATR above 30. I think this range is going to break here at some point reasonably soon. So let's hope that that happens sooner rather than later. All right, so this is bar 23 here, coming right into the top end of the range. If it were to close like now, there's not a chance that I'm taking that right at the top end of the range. ranges have about a 20% chance of breaking on any given test. So I would need another bar. But until this range breaks, man, I'll just take continuation back and forth in the range if we get it. All right, got funded. Let's go. Good job. Love to see that. Man, it's like all these people who just start trading RAM. All of a sudden, oh, I'm funded. Oh, I'm taking payouts. What a coincidence. It's simple. It works for me. I think it'll probably work for you too if it resonates with you. Give it a shot. I don't like being confused. Staying as least confused as possible is a huge framework here. All right, 23, close us up. 24, give us a punch through higher. And then boom, we got trade number 2. All right, good close down at 23, but contextually speaking, it's not ready yet for me to cook on it because we've got this guy. Big giant range. So if 24 breaks that up, then we're good to go. Brandon, can you explain why this context allows for taking a trade in the middle of the range versus it just being for degens and algos? Yeah, so I commonly say that the middle of the range is for algos and degenerates, but context is everything. Context comes before setup. Okay, so when the context is trading range here, and the trading range is, depending on how you draw it, maybe 100, 120 points wide. You could draw it 80 points wide also. And we have 19, 20, get above the 20 EMA, clean close out of 21, moderately sized bull body. That's at least 2 in a row with this small, tiny little doji at 19 coming out of a weakening bear move. Clearly, it's trying to backfill the range. So we happen to be in the middle of the range, yes, but contextually, it's a setup. There's room to the upside. The risk on 21 does not blow out the room that we have, and it's reasonable for a scalp. Now, would I put that on for a swing? Nope. No, I would not. But I'd put it on for a scalp every time. Now, when there's no setup and we're in the middle of a range, that's, and it's like, especially when it's a tight range, like 18 points wide, that's when the middle of the range is for algos and degenerates. The beauty of all this stuff is you really only need to learn it like once, twice, and then it clicks and you're like, okay, I know what I'm looking at now. Just watch more charts, man. You'll get good. On an 80-point range, how many points you're going to look for out of a scalp? So I don't think about it that way. What I think about is either half an ATR. Really, I have 4 primary methodologies of taking profit that live inside the RAM framework. Half an ATR, 1 ATR, 1 R, or 2 R. 2 R is going to be swing trades. Half an ATR is always going to be scalps. 1 ATR and 1 R can kind of be either or, and it depends. In a range, I'm more likely to take a half or better ATR scalp. That last scalp, I got 2/3 of an ATR because the risk was a little sizable compared to what half of an ATR was, because I roughly know the probability on a setup like that in basically every case, roughly, right? So I'm like, okay, well, let me get 2/3 of an ATR since ATR is only 29, and the risk is more than that. The signal body was more than that. So we beefed up that reward a little bit. Let's go for 2/3 of an ATR, because you're like, well, why not go for a full ATR? Because a full ATR had us right at the tippy top of the range, and the probability, you're fighting an uphill battle at that point, because the bears are already stepping in trying to front run the rejection, and the bulls are already getting scared and stepping out on average, right? I hope you guys listen to what I'm saying and you're like, yeah, I mean, that's logical. I might disagree, but I can't really argue because it's logical. Yes, and I will give you the same respect. If what you say is reasonably logical, I'll say, yeah, that makes sense. That makes sense. Here's maybe why I wouldn't choose to do that, but here's why you might make money. Just do logical things. This is the entirety of RAM, man. Do logical things, have rules, be patient, and when they come, slap them on, no matter how often they come. If they come on once a day, guess you're only taking 1 trade that day. If you get 14 trades that day, I guess you're putting on 14. Come into work ready every day, ready to be patient, but ready to execute too, because you never know what you're going to get. If you get a big old trend day, and it trends 1,000 points, man, you better be ready. You better be ready. You might get 20 entries. And then, a morning like yesterday, you show up, market's kind of slow, ATR just tanks, and there's really nothing. That's okay too, it's all part of the job. No, just here, but the delay on YouTube is 2 to 3 seconds, unless you're in Europe, then it might be 4, 5, 6 seconds. A lot of you guys are falling behind, you don't realize it. Press the live button, it'll bring you back to live. But the delay here on YouTube I have entirely optimized to be as little as humanly possible. You guys, all live events ever, there's latency. Okay, 2 to 3 seconds is ridiculously low. All right, bar 25. Minute 48 out. You guys can see here, right as we get to the top end of this region, which is also the high of day, bulls start hesitating. Predictable. It's a range day, man. You gotta wait for it to break out. Don't be betting on the breakout unless it happens. And unless, for me, I'm getting at least 1 or 2 closes outside of it. Within a sequence. All right, 30 seconds out here from the close of 25. All right, Bears. Let's see if the Bears can give us a nice clean close. Basically looking for a repeat of 21, just the other way. Leo, yes there are. Yes there are, brother. There's a whole lot of stops right below the wick low of bar 1. And man, if we get an opportunity to stop hunt it, you know I'm going to take it. All right, 255 out here from the close of bar 26. These bulls want to take this baby higher, and it'd be nice if they would. All right, I'll tell you what. I think it's check-in time, man. How you guys doing today? Feel free to share. Of course, you don't have to. It's no one's business but yours. But today's a range day, man. And if you're getting trigger happy betting on breakouts, I'm telling you that's your problem. One of the, I'd say, top 5 warnings inside the RAM framework is do not bet on breakouts when it's clearly still a range, because the probability of it doing it this time is about 20% or less. And if you're doing that today and getting killed, that's what you're doing wrong, man. Hey, welcome. Yes, live every day. Inventor, what's up, brother? How we doing? All right, there's the close. Big inside close on 26. Tiny little bull body. So I guess we go to 27 now, don't we? Okay, so this is a question that I get a lot. People say, okay, if it's a 20% chance of the breakout happening on any given test, shouldn't you short it? And the answer is yes, sometimes. The problem, though, is managing risk when you're shorting the top end of a range or buying the low end of a range is really arbitrary. You have to put the stop somewhere, so where do you put it kind of thing. And usually it ends up being some variation of ATR, which is fine. But there's nuance in the statistic. It doesn't mean that 80% of the time it'll reverse all the way to the other end of the range. What it means is 80% of the time it just won't succeed quickly on the breakout. Which doesn't, nothing in there says that it has to pull back. Okay, so it's a lower quality trade in a range than a normal continuation trade that I'll take. But it is high enough quality to take in scenarios where you can make sense of managing the risk. It gets really discretionary in a range is what I'm telling you. But yeah, you can. And it falls within RAM if you can make sense of what you're looking at. All right, 15 seconds out here until the close of 27. All right, 28. If 28 is a nice clean bear body, then we have a stop limit sell for the bears. 440 out. Got to see a nice clean low close on 28. Thanks, Nico. Followed Ram, made a quick 300 bucks in London session. Very good works. Even slept in this morning. Felt good. Love to hear it. Yeah, listen, guys, you can trade it whenever you'd like. There's some nuance. If you're gonna trade Asia session, you want to be a little slower to buy into aggressive continuation moves because they reverse a little more often in Asia session. That's really one of the only nuances as far as trading RAM all day. But that's also kind of self-explanatory as far as context, right? There's more ranges during Asia, and you usually see that on the chart anyway. It's not really necessarily something you even have to know going into it. You'll just see it, which is very nice. So if all you have to trade is listen, I can only trade Asia. Guess I can't trade RAM. That's not true. You can trade it any time of day. It's just less volatility in Asia. All right, 28, 318 out. Let's see if we can get a big old low close. All right, 28. $50 seconds out here. All right, here comes the rollover of 28. Big old doji. All right, let's see what 29 brings. Can 29, it seems like the bulls are trying to pad up the low end of this trading range and inevitably try to break this thing higher. But if the bears can get 29 closing beneath the wick low of 28, then I would be looking to enter short using a stop limit sell. Three and a half minutes out. All right, guys, hey, quick break. I'll be right back. Don't go anywhere. We might have something here. Let's find out. All right. Welcome back. We're a minute 10 out. These bears aren't getting it done. Bulls trying to hold us up. They're always trying to pull something. They're trying to hold it up and tighten down this channel so that they can slowly whittle away at the bears until they let these bulls break it higher. And the bears just aren't giving that up quite yet. All right, here comes the rollover, and a whole lot of nothing there on 29. Big old bull doji. All right, big bar 30, what you got for us? All right, Bears. What do they got in their back pocket here? They are trying. All right, we're halfway through this 5-minute bar, man. Big bar 30, what you got? Come on, Bears. So, this happens all the time. This is really, really common. You get a big range right on the full day. Then one side tries to cut it in half. Okay, now when this happens, what I really would like to happen is for whichever side does this to win and push it up out of this big trading range, because then it can turn into a trend, and trends are where our life gets really, really easy. Okay, now if the Bears end up winning this and we're back into the trading range, that's not tremendous. But we can still take trades. They're just, not going to be as frequent or maybe as clean sometimes. We'd love to see that occur. This happens all the time. Everything just repeats. All right, 30 seconds here till the close of 30. Oh, goodness. Bar 30, big old doji. Whole lot of nothing on 30. All right, 31. Got something for us or what? What, you guys are planning a ram meet? Yeah, we'll have to do some kind of convention at some point. But I'll tell you one thing, man. I don't party. And I think we all know what a get-together in Miami is going to turn into. Ah, 31! Now, hopefully, if you are trading RAM, man, hopefully you're not, taking anything since bar 24, at the early. There's just nothing. Since bar 24, there's nothing here. And that's okay. You just gotta wait this out. Well, I mean, so far here, you know, it's been an okay Pharaoh Friday. We got a trade. Worked very well. Bought the close of 21 into the open of 22. Bar 21 into 22, that is. So we didn't get skunked so far, which is good. Man, the full range on the day, what is it? 430. Less than 120 points. Yeah, about 118, 119 points. Full range on the day so far. You know, now while we wait here, I'm actually very curious. As we sit here at all-time highs, what are your guys' thoughts? I know there. Now, let's talk macro for a second. There's a lot of talk of a market crash here coming at some point. Crash, not pullback. There's a lot of people saying crash. Now, I think trying to predict that sort of thing is kind of a fool's errand. Just trade the price action. But let's speculate for a second. What do you guys think? You think it's coming? I gotta tell you, I mean, it wouldn't surprise me. A lot of people are citing that, you know, I've heard so many different arguments, but some people are like, you know, the peace in the Middle East isn't gonna last, and people are wearing rose-colored glasses, and I don't know, man. Who cares? Just trade the price action, and if the market does crash, good. Buy it. Buy it with cash. Don't use margin. Use the crash to try to make as much as you can revenue, and then use that cash, dump it right back into the market as it's crashing, and hold on. That's the way that I think you should do this. But what do you guys think? Is it coming? Yeah, a lot of you guys mixed bag. You know, I gotta tell you, as far as... Okay. We have a lot of newer people here. I don't want to play the fear-mongering game these days. Like, it's just boring. It's old, it's boring, it doesn't... You know, it really... You think it's like providing value, but it kind of doesn't. Like, fuck it, let's just talk about trading, because this is the game here. And let's be honest, a lot of you guys who are new, you're like, a crash, that sounds really, really bad. I love when the market's at all-time highs. Because, fuck yeah, I love America. Good. Market's at all-time highs, people are getting rich. Love it. But, for you newer traders, a market crash might be the best thing that has ever happened to you. If it came in the next like 2 years, a full-blown crash would be tremendous for us. Okay, now if you're retiring soon, maybe not so much, right? But like, let's just be real about it. Volatility tends to die and really slow around all-time highs. The whole stairs up, elevator down mentality. When volatility is higher, traders make more money. At least traders that have positive expected value, who have edge. When the market crashes, we tend to do really well. And you know what happens when we tend to do really well? We make a lot of money, and now you have all this cash sitting there, You're making money the whole way down. Every day you come in, you say, all right, I'm going to look for any reason to get short, assuming that's what the price action tells me. And you're like, yep, that's what the price action's telling me. And this happens for like 2 months straight. And you look for any reason to get short, you get short, and you print. And everybody's freaking out, and you turn the TV off, and you sit there and make money. And by the end, you look up, and you've done very well. And then you take it, and you do not use margin. Okay, just don't do it. It's not... You guys know, like I'm a fucking day trader, for Christ's sakes. I'm not scared of risk, but just don't use margin. We take enough risk intraday, take the cash, drive it back into the market. And the reason I say don't use margin is not because I don't think it's an effective tool. We're very leveraged when we're trading futures, okay? I'm not against leverage if you manage your risk. But when you're investing and you're buying a crash using your money, your cash, you don't need margin. All margin does is force you to time it properly, and if you don't, somebody can give you a phone call, not literally, but kinda, and say, hey, we're gonna need those shares back. And they liquidate you at the bottom, and then you watch the market reverse for the next 3 years without you, and you're calculating how much money you would have made. It's just not worth it, dude. It's just not worth it. Just make more money trading, focus on working harder, generating revenue, hold your positions for the long term, cash, and nobody can call you and say, hey, those are ours, because they're yours. And if you buy while it's crashing, all you have to do is sit and wait, and eventually, assuming America is America, which it is, you'll do pretty well. Now, that's not to say that the market always has to go up. I'm also not a believer in that. People say, oh, just buy the S&P 500 and wait 40 years. It's like, wow, what a passive way to live. You guys ever seen the Japanese stock market? Thing didn't reach all-time highs again for like 20-some years. That's crazy. But, you know, at some point you got to bet on America, right? So if you're buying a crash, use cash. You don't need margin. Just don't do it. We're not against risk, but it's just dumb and it's just stressful, and it's going to keep you up at night. If you're holding cash in the market long term, you buy the S&P, you buy the Nasdaq, whatever. You buy a few stocks you really like and just hold it. No one can take it away from you. Nobody. And then you just go back to work. You don't think about it, and you sit and you focus on managing your business of trading. All that to say, a market crash right now would be the best thing that's ever happened to a whole lot of you guys, if you approach it that way. Yeah, well, I mean, listen, guys, margin is very different intraday than investing. If you're, okay, look at serious, like, stock day trading brokers. Typically, they offer you 4-to-1 intraday margin. It's not the same thing, okay? Because assuming you're a good trader, you're always managing your risk. So even if you dip into margin intraday, it's not the same. I'm not talking about that. That is just a tool. The reason they give that to you, by the way, is very obvious, so that you generate more commissions. They're like, hey, you know, we have all this cash sitting here. Let's just give you margin 4x, let you trade bigger. We'll protect our downside through auto liquidation if you're an idiot, but we're not, because we're always managing our risk, right? Way before that would ever happen to us intraday. When you're investing, you're just buying and holding. That is night and day. You don't need margin for investing. Intraday, as long as you're a good trader and you actually manage your risk and you trade small enough, if you dip into that, it doesn't matter because you're managing things properly. It's just a tool at your disposal intraday. You're not going to get margin called intraday if you're cutting your losers when you should be. Now, if you don't trust yourself, don't use it. But if you dip into it, big deal. It doesn't matter. But if you're investing on margin, that is literally night and day. Do not do that. That's really, really dumb. Never give someone else the ability to call you and say, hey, that's mine. Don't do that. All right, guys. Well, I mean, I'll tell you what. I got to go hit lunch while this market works itself out. We did catch a trade today. Did fine on it. If you missed it, you can go back and watch it here on the stream. But I'll tell you guys what. Half reasonable Pharaoh Friday. A little bit slow, but we were able to catch something. Monday's going to be better, man. Back at it for Midas Monday. I will see you guys all there. Hey, weekend reminder. Do your job this weekend. Your job is not to flip out and have anxiety all weekend. I need to trade. And you sit down Sunday at open. Calm down. Rest up. Make yourself mentally well for Monday because we've got work to do. And if Monday's a hot day, you always got to sit down 100% ready to rock. Because if it's hot and Monday trends, got to be ready to work. Always sit down ready, no matter what your expectation is on the day. You never see, well, I shouldn't say never. You never see the initial big day coming. When you have a huge day, oftentimes you come in, you go to bed early that night, you get up early, you come in and wait because that next day might also be a big day, but you don't really ever see the initial big day coming. Any day could be that day. So always sit down ready to work, which means you need to rest up this weekend, do whatever that means to you, and come in mentally available and ready for Midas Monday. All right, guys? All right. Have a great weekend. I'll see you soon.